Time for the opening markets right now, and we're talking with Greg McBride from Allendale, getting going here on the first trading week of February. Looked like the markets, corn and soybeans, were seeing their shadow this morning.
Yeah, we are backing things off a little bit. You have to look at a lot of different things. You've got the dollar had made new lows for the past 4 years last week and has started to rebound. So we're about $1 off the lows in that market, staying at 97.26. A higher dollar does tend to put some pressure into commodities, and that's what we're seeing to start the week. You also have to look at we are in active harvest in Brazil for soybeans, and actually some of that first crop corn. It's going well. There's no major issues, no major hiccups. Some of the southern portions have been on the drier side of things, but they continue to get rain, or they have decent subsoil moisture to kind of fill in the gaps when they're not getting the rain. So overall, we are still looking at a big crop getting bigger in Brazil. So you see the corn, you see the beans stepping back. You see some of the adverse weather walking back a little bit. So the cold is not as bad as it was last week or the week before. You've got those ice storms have kind of calmed down. So the winter wheat crops are starting to back off after their little rally that they had on some of those weather concerns. So there are a lot of moving pieces here, but at the end of the day, fundamentals are still on the bear side for the grains at this point.
You know, interesting. We were talking before we were on the air, and it's something we've been talking about quite a bit in the last couple of weeks, and that has been the metals market. And that really took a nosedive on Friday after, we had been saying that it's just odd that it's been going so well that it had an adverse effect on the commodities as well, right?
Yeah, the move that we saw in the metals, and it may not be over. This may have just been a correction. We were looking for a correction for quite a while. We just kept going higher and higher and higher. The thing that you look at is in that metals market, especially as you went into the end of last week and you saw that big sell off in pretty much every metals contract, was that you had a kind of a perfect storm of bullishness. You have a tight supply in some of those metals. You have good demand, very good demand. You have your increasing demand. You also had safe haven buying as there's some of these geopolitical issues ramp up, whether that was Iran, whether that was Venezuela, whether that was Cuba or Greenland or any of these other ones out there. So when there's trouble in the world, people will go to the metals because that will hold value better than, say, the dollar or some of their own currencies. So that is a safe haven buying type situation, and you see those markets respond accordingly. Now, the washout that we saw on Friday was probably overdone, but overall, we probably didn't have any business trading $120 silver after trading in the mid 50s, middle to late last year. Just doubling in price as we did was a pretty incredible move. But again, like I said, it was kind of a perfect storm of bullishness in the metal markets.
All right, switching gears over to the livestock side of things, Greg. We got the cattle inventory report on Friday, and of course, NCBA convention going on now this week in Nashville. I mean, is there anything in that report that's going to catch the attention of these producers as they're all gathering here in Tennessee?
The short answer was no. That report didn't do a whole heck of a lot for us. It was. You did see that the expansion conversation was not there, so that was one that we were looking to see if there was anything that was going to show us heifer retention that would lead us to see an expansion starting in 12 to 18 months. It wasn't necessarily there. That wasn't what we were hoping to see. We also didn't see. We saw slightly higher beef dairy numbers or dairy beef numbers. That's crossbreeding with dairy cattle with beef cattle. That was slightly higher, but not enough to really, tip the balance. So overall, this was a friendly report. Pretty well fell in line with what we expected. And I mean, the market took a step back on Friday. We're getting all of that back here as we start the week here today.
Now, it's interesting. I mean, I'm looking at the situation we've got in cattle, and, it seems like there isn't a whole lot of incentive for them to increase the herd size. I mean, if you're able to do your own calving, that's pure profit in a way. But the problem is in the feedlots, though, they're the ones that have to replenish, and, they may need a dump truck to get their sales money hooked up, but then they got to take that dump truck somewhere else to restock.
Well, that is the problem. So you're having a situation where, with all those cattle that are held back in Mexico, or just in general, that they're not able to replenish off of those cattle. You're having a situation where feedlots are not able to go out and find readily available cattle to fill fill that bunk space. So that is a situation that they can't effectively do their jobs. So, some of these feedlots, they'll hold anywhere from 5,000 upwards of maybe 90,000 head of cattle, and they're running at maybe half capacity or even less. That's just money that's not coming in and going out in that situation. Now, it does mean that they're feeding less. They're feeding less grain, so there's some cost benefit there. But at the end of the day, these guys just want to have the head of cattle in their pens, so that they can continue to do what they do best.
And then a quick check of how the hogs are looking here before we wrap up today.
So this hog market is an interesting one. You have seen it kind of step back. It's got a nice start to the week here, up about $1.50 to $2. This is, I get nervous on this thing because you have started to see this market start to show some question marks when it comes to cash, or when it comes to pork exports, or all the different inputs that kind of lead us to where the future should go. You're getting into what I would characterize as nosebleed territory. You start to look at this April contract, which is your front month for open interest and volume when it comes to the futures, and that is a situation where as you get closer to $100, it is getting a little bit overdone. Same thing with those early spring or late spring and summer hogs up in the $110 to $112 area. That is kind of that nosebleed section where you don't necessarily have the fundamentals to support significantly higher prices from here. So we might be starting to reach a top. You might have seen that early last week or into the end of the previous week with those prices kind of topping out. Now, like I said, we have bounced to start the week, but it does still look like a little bit of a topping action after a gap lower on Tuesday last week.
All right. Well, Greg, if folks want to get some more information from you guys and kind of keep an eye on what you guys are following in the market, what's the best place for them to make that start in that conversation?
Give us a call at 800-2-MARKET. That's 800-262-7538.
All right. Greg McBride has been our guest here today. Thanks so much for the insight. We'll talk to you again real soon.
All right. Thank you.
Let's go ahead and take a look at where the numbers are here right now on the Board of Trade. March corn is trading 2 1/4 lower at $4.26 even. May down 2 1/4 at $4.33 1/2. March beans down 3 1/4 at $10.61 even. May down 3 1/2 at $10.73 1/2. Soybean meal down 50 cents at $2.93.10. Soy oil down 41 cents at $53.10. Chicago wheat down 8 3/4 at $5.29 1/4. Kansas wheat for winter is down 8 cents at $5.36 3/4. Kansas spring wheat down 8 3/4 at $5.65 even. Minneapolis spring wheat down 4 cents at $5.74 1/4. Oats trading down 7 1/2 at $2.99 1/4. On the Merck, February live cattle up $2.80 at $238.65. March feeders up $6.55. That's at $366.82. February lean hogs up 52 cents at $87.77. Pork cutouts trading even right now at $97.95. And Class 3 milk is even as well at $14.62. That's been a check of the opening markets. Thanks again to Greg McBride of Allendale for joining us on this morning's Opening Market Podcast. I'm Dustin Huffman on the Iowa Agribusiness Radio Network, where Iowa Ag matters.